start? My name is May Doldalau, and I have a blog. Good morning. Thank you for being on. Thank you. Hi, Carlos Lobo. I have a blog called YesFinanciallyFree.com. And in that blog, I talk about how to become financially free as quickly as possible. If you are watching this on my blog, thanks for being on my blog. So thanks for the super heart. Wow, my gosh, super hearts are cool. They're so glittery and they float in the air. So my name, as I said, was May. I live in Honolulu, Hawaii. It's 6:50 a.m. in the morning on a Wednesday. And I'm doing these webinars for my son, who's 4. His name is Jordan, wakes up. And I used to have a lot of debt. That's why I started going on this journey of financial freedom. I used to have about over $30,000 of like credit card debt, consumer line debt back in 2010, 2011. Swamo, welcome to Periscope. Hi. I ended up paying up all that debt and became debt-free in April of 2016. Quit my job in 2016, and then started coaching people in what I did to pay off all that debt and also make passive income. So we made about $500 a month in passive income. Hi, Kirim. Hi, Chris. Welcome. So this is what my journey was. So I went from debt to no debt, and I started investing and paying myself first, saving money, tracking my net worth, doing everything the financial really rich told me to do. They said, do these things and you'll become financially free. So I did what they told me to do, right? And I started tracking. I started paying myself first, learning about investing. And I never stopped. So I'm still constantly learning about investing. And if you want to be a leader, if you want to be financially well off, you need to constantly be learning, all right? So this is something that I learned. And the nice thing is I love to learn. So it fit right in. So quitting my job was awesome. I used to work at a bank, and I didn't really like the being there from 8 to 5, 8 to 4, 8 to 5, sometimes 8 to 6 on Fridays is kind of a long job. And I didn't like having freedom. I wanted to have the freedom, like if my son was at a preschool event, to just go see my son, right? Because he was cute. I remember when he started preschool, he was like 2, and then he turned 3. And I like to go see them when they did cool things. Like the first time we ever went trick-or-treating, we had to dress them up. I couldn't go because the girl who worked with me in the same position, she was on vacation, so I couldn't leave. And I was so mad that I decided that day to quit my job. Even though I've been thinking about it for a while, I was like, this is it. So I didn't quit that day, but I decided. The following, that was Halloween 2016, right? So I gave them my notice on Thanksgiving 2016 to leave in December. And December was when I left. And I haven't looked back. 2017, we bought a condo. We went on 5 weeks of vacation. I went on my first cruise. I went to Mexico for 5 days. It was amazing. And I've never been on a cruise ship. I had imagined being on a cruise ship for like over a year, and I finally got to go. Thanks for the heart. Hi, Gigi. Hi, guys. Welcome to the live. Thanks for joining. So my life changed a lot. This year, I'm spending a lot of time with my members, my mastermind members, and helping them create passive income, create freedom, create more financial freedom for themselves. I'm also spending a lot of time looking for investments and further educating myself. So I started reading this book, and this is what today's topic is about. This is an older book, guys. It was written in 1995. It's a little dated, but some of it's still very, very good reading. Okay, let's put it that way. It was recommended by Robert Kiyosaki in his book, The Cash Flow Quadrant. He said, if you want to be a serious investor, you have to read these books. And then he had this book. He said to read a certain kinds of books, and one of them was this book. So that's why I'm reading this book. I read one of the books he recommends every month. The book is over 400 pages long. Okay, so I'm reading Now this book is called, they call it At the Crest of the Tidal Wave. And it's by Robert R. Prechter Jr. And it's a forecast for the bear market. So in 1995, in this book, he predicted that we would have a recession, a depression, and it would be huge. And it would take all the ups that we had had in the market up to 1995, and it would all come crashing down. And one of the things he mentioned was interesting. He's like, they're making strange derivatives at 1995, right? It's like they're creating investment products called futures. You know, never had futures before. People are going crazy over options. And then the funny thing was like they're packaging mortgages into like these stock optionable things, which are so odd. And that's exactly what caused the housing crisis. One of the things, right? They over leveraged mortgages, plus there were all those bad mortgages, and then housing crisis, right? Hi, Oscar, welcome. Good. So he talks about how can you predict, how do you know when the market's going to go up and when it's going to go down? Because before the market went up in the 1970s, the market was really bad. They had gas rationing, food rationing. This guy and his theorists predicted the market would go up, and nobody believed them, right? Hi. So nobody believed that the market would go up, and they told a lot of reasons why they believed the market would go up, and the market did go up a lot, just like they said. And then 1995, they predicted the market would tank. And this book was written to talk about why they believed the market would go down. I love this book. I think it's so interesting, actually. I'm reading it. I'm like, if I can learn how to analyze markets like them and figure out when markets will go up and down, oh my gosh, how much money will I make, right? It's like, what a skill, right? The interesting thing about the book and how it works is they create this theory, all right? They create a theory about how to predict. It's called, I don't know if they created it, but they use a theory called Elliott wave theory. All right. I'll give you kind of a look at what it looks like in the book. So basically they chart these waves. And I'm showing all of my lives, the waves. I'm showing them one at a time so everybody gets to see. Okay, so they have these waves in succession, right? And they chart them go up and down, up and down, up and down, right? If you've ever seen a stock chart, it does this kind of thing, right? What they say is that you can predict that cycles will have 5 waves. Have you ever discussed having and maintaining a franchise? Is it worth it? Hi, TJ. Hi, Cork Zuri and J6889. I never discussed that fully because that is not my forte. Like, I don't know about that, so I'm not going to be able to talk about as much. I have heard Robert Kiyosaki talk about franchises, and it's a very good way to buy a business because the system is already created. So as long as you follow the system, your likelihood of success is very high, as opposed to creating your very own business from scratch. So that's what I've heard about franchises. And I've heard to buy one, it depends, but I know McDonald's might cost about $1 million to buy a McDonald's franchise. So, and I've heard franchises work really well, but you have to be someone who is okay with following someone else's system. So if you feel like you have to do everything your own way and do it the way you want, it won't work for you. Hi, Peter Scoville, 3, welcome. Have you ever seen The Founder? The Founder with Michael Keaton, the movie that came out about a couple years ago. They talk about the founder of McDonald's, right? It's a really good movie, and it talks a lot about the systemization of how franchises work as well, and how you can't just do your own thing. Like in the beginning, when they first started doing McDonald's, one of the people who bought the franchise wanted to sell fried chicken, and he wanted to do certain things differently. And that kind of ruined the franchise. And so there's certain like, hi, Chris. Looks like such a, so there's certain things that franchises do that are good, which is like they're systematic, but not so good in that you cannot be creative. You cannot do your own thing in a franchise. So that's all I got for you on franchises. There's lots of them available. There's Jamba Juice. There's, Starbucks. There's McDonald's. There's so many things you can do with franchising. So, I mean, if you're interested in a franchise, I would say go for it and look into it more. Yeah. That would be my take on it. But know that it's not going to be super easy to work. You still have to do things to make a franchise work. You have to have a little more capital than if you want to just do stock investing or something. So basically, in the wave theory, the waves go up and down, and basically they have 5 cycles. All right, so they predict it would go up. So there's an up wave, that's 1. Then it'll go down, that's wave 2. Then it'll go up a little higher, all right, and that's 3. And then they'll go down, that's 4. And then it'll go up, and that's 5. Okay, so that's the 5 waves. Now, you can have a bear market or a bull market. What is a bear market and what is a bull market? A bear market is a market that's up, going up. Okay, so, bull market. So people say bull, they mean it's going up, it's great, it's strong, bullish, right? That's bull market. So a bull market has the chart going up like that. Okay, now bear market is the opposite. Bear market means people think the market's going down. Not that people think it's going down, it is going down. Okay, bear market is like that. Okay, so how do you get rich in investing is going in at the bottom of a bear and getting out at the top of a bull, right? Does that make sense? You buy cheap and you sell high. Now, people don't do this, right? Psychologically, it's really hard for people to do this. Now, as I've heard, and I don't know what your feelings are, and this, I'm just going to throw this out and then talk about more about this theory. I've heard that people say right now stocks are at an all-time high and they're overpriced. And that if you get in now, you'll lose money because you're getting in at the top of the market. This is stuff that I've heard, all right? I don't know if that's what you guys have heard too, or if it's different. So depending on what we've all heard, it will tell us where we are in the wave, apparently. Because the thing that makes these waves work and the reason why these waves actually happen the way they do, markets are determined by people and our behavior. They're not determined by corporate earnings. They're not determined by how well like companies are doing, like the stock market. He does this theory for gold market, stock market, currency markets. I haven't read the currency market chapter yet. But anyway, let's talk about this, okay? So he says market performance is completely related to how people view the market, okay? Because that's what determines how the market behaves, right? If everybody's selling, the market tanks. If everybody's buying, the market goes up, right? All that matters is what people think about the market. So the whole Elliott wave theory and all these waves he does in this book and everything, all of it is to model human behavior, to model how real people react to markets. Okay, so to understand how the market is doing, we need to understand how psychology is now. So if we were in a great bear market now, everyone would be depressed about the market. Nobody would want to be in the stock market. All right, you would pull all your money would have been already pulled out. That would be a bear market. All right, you would have pulled all your money out, and you would have you'd be very pessimistic about the future. Apparently, according to this book that was written in 1995, the prior bear market, at the bottom of that bear market, people had their money in Swiss francs. You know, they put them in short-term treasury bonds, okay, because they didn't trust anybody. So they didn't even trust the U.S. government. They put it in Swiss francs because that's where they put their money, all right? So nobody was in the stock market. Nobody recommended the market. The number of brokers and brokerage firms out there was like 0 almost. Hi, Nasser 349. Hi, Swimming West 3. There was no such thing as index funds. There was no such thing as futures. All those things didn't exist back in the last great bear market from this book. Like I said, it was written in 1985. So the last great bear market, like I said, was like in the 70s, the late 70s, early 80s. And at that time, they recommended you get in the market and buy, okay? Because they said the market's going to go up. You know, the market right now is like very low. It's in the hundreds. It's going to go up to 2,000, 3,000. It's going to go so high, it'll be ridiculous. Everyone's like, you don't know what you're talking about. and they went and they bought, and then the market went up that high, right? So the point is, you have to know social psychology. So if everybody is saying get out of the market, and everyone is out of the market, and nobody's in the market anymore, and they don't trust the stock market, and they're like, you know, all these things, you know, that's when to get in. All right. Now, everyone could say that retrospectively. Oh, yeah, you know, I was, you know, but when you're in the market and you're handling your money, it's not so easy to be that psychologically strong and put your money in when everyone is so pessimistic about the future. And usually when that happens, they're not only pessimistic about a market, things will happen that will make them feel like the world will be ending, like wars will be imminent, maybe you know, communism will be reigning, and they'll be fearing nuclear attacks, and things like that will happen during a down bear market, because as the economy goes down, a lot of warfare, violence, strife will go up. All right, so there's a lot going on. It's like a very deeply psychological process, according to this book. Really fascinating. So when you feel like the world is all dandy and wonderful, right? Where should I put my 20,000? I'm not a financial advisor, but let's talk more about this. So when you think the market is absolutely wonderful, when they're creating all these things and everyone wants to get in and they're telling their neighbors to get in and everyone's in the stock market and they just assume the market will always be going up, and they put all their retirement money in the market automatically because that's what everybody does. That's when the market's going to crash. Okay, when everybody assumes that the market always goes up, and if you put your money in the stock market, you will necessarily always be rich. And yeah, he says that diversity is buckus, by the way. So diversity is something that people in the market created because a lot of people wanted to get in the market. Like, it was so high in 1995. It was such a big bear. It was such a big bull market. Everyone wanted to be in the stock market. And to create more stuff for people to buy, they said, hey, you can diversify. You can buy junk bonds. You can buy foreign stocks. You can buy stocks in emerging countries where they don't even have laws to protect people from the companies, you know, conning you. You can buy stocks there. You know, you can buy stocks everywhere. So according to the book, diversification was just to get you to buy more stocks. And it was not good for your stock portfolio. I've got coins from Fun Factory, so I'm safe. Good for you. Wow, 2 people said the exact same thing. That must be trending. That's a weird line for me. So anyway, this book talks about the analysis, how to figure it out. And it goes through an analysis of the transportation index. Your video is breaking up really terribly. Oh, I'm sorry, Chris, that you can't see the video very well. I apologize. Okay, so you can watch it on the blog. If you go to Yes Financially Free, I'm also broadcasting on YouTube, so you can watch it on my blog. Or you can watch it on my YouTube channel. But my blog, yesfinanciallyfree.com, is broadcasting live. So if you're not seeing this good where you are, you can go to my blog and see it as well, okay? So he goes through the gold market. He goes through copper market. He goes through stock market, transportation index. He's now going in, I'm now in the chapter on the currency market. Basically, what he's saying is that all these markets operate with the same 5-wave principle. So you're going to go 5 waves up, and after you go 5 waves up, you have to go 5 waves down. So basically, you have to figure out, did we have, and according to this book, just to say, they predict that this, thanks for, wow, more super hearts. Thank you, JP501. Appreciate that. That was a nice sparkly one. But anyway, if you guys don't know what super hearts are, in Periscope, they give you these fancy hearts. They're really pretty. But anyway, so basically, they predict that in, I think, the year 2089 or something is going to be the end of the Great Bear Market. So according to this book, we have another big depression coming. All right, so there's one more. So there's always ups and downs on either side, right? When you have a bear, it goes like this. Okay? And when you have a bull, it goes like this. Okay, so you're going up like that, or you're going down like that. So right now, according to this book, we're in a bear market. So the bear market cycle goes like this, down, and then it goes up, and then it goes down again, and then it goes up and it goes down. Yes, I do surf, although not as much recently. So because of that, they talk about one recession in 1982. I don't know if that counts now that they look back retrospectively. Yes, we're talking stock. We're talking all kinds of markets. So right now we're talking about the stock market. Okay. So they said that it went down in 82, came back up. And then they were waiting for a very big depression to hit. They said one would be big. And then we had the housing crisis, right? The housing crisis. So that happened and brought it down pretty low, much lower than the 1982 depression, right? So that one was the next one. So there's going to be one more. They predict the ending to be, like I said, around 2080, 80 something. So they predict the ending to be in 60 years. So there's another big depression coming, according to this wave theorists, right? If you want to read more about the technical details, go get the book yourself or look up Elliott wave theory. And the guy's name is Robert Prechter. And they're probably still doing publications now. I'm actually in the middle of reading this book. And when I finish this book, I was going to look at what they were saying now. It's very curious. But according to the book, we are in a bear market. So whenever there's a high in a bear market, people feel like the bear market's over and they go back to their original behavior of buying a bunch of options, derivatives, futures. I don't think they package mortgages anymore into, I don't know, they might. I'm not gonna guess. But last time when they packaged all those mortgages into those like securities, right? And they leveraged all those mortgages. And then when the housing crisis crashed, it just like destroyed everything. I don't know if they still package mortgages like they did. They probably do, honestly. But so basically what happens is when you're in a great bull market and you start going into a bear cycle, he calls it the sliding wall of hope. So even though you're going down, you're still hopeful that you're up. So everybody's still in the market. They still feel like it's okay and they don't get out, right? And that's why you have this bear, right? And then it goes down crashing 3 times. And after these huge crash, and then the first one is there and the second one's the biggest. And then the third one's big as well, right? So you have these crashes. In fact, at the end of all these crashes, people finally agree. No, I'm not a finance major. People finally agree at the bottom of this market that it really does suck. The market's bad, and they start taking all their money out and they're like, this is it, I'm done. And that's the end of the bear market. When everybody's like, screw this, I'm done with the stock market, I'm taking everything out. That's the bottom. And that's when you put everything in. Okay? So we're not at the bottom of a bear. We're definitely not. I could tell because people are not pulling all their money out of the stock market. We haven't gone doomsday feeling in the society. It's not like that at all. So what we actually have right now, the market was up, right, last year, and now it's kind of going down a little, right? So we are according to Prechter wave theory, we are going to be hitting a huge depression recession soon. Okay, so check it out yourself if you're wondering. It's called At the Crest of the Tidal Wave by Robert R. Prechter Jr. And it's very convincing. There's 400 pages of analysis. It's really interesting. Okay, so you guys should check it out. All right. Now, you totally can disagree or agree. It's all your call. But I'm reading the book and I'm learning the studies. Honestly, the math part where he charts out the charts and does the Fibonacci series and all these things that he does to calculate all this is a little bit over my head. But you'll have to check it out. Okay, so someone here says they know we'll hit a recession, but not a big one. Are you Robert Prechter? I just wondering. But anyway, Sorry, no, I seem to have the hardest time to invest in gold. Is it a trick? Gold also follows the Fibonacci, the wave theory. He has a wave for gold as well in here, but I don't know. He doesn't predict necessarily about gold in this book. He's predicting about the stock market. So this was written in 1995 to get you out of it, all right? To get you out of the stock market. All right. So that's basically all I wanted to talk about today. I'll end it with the thing where he said, this is how you can tell, and it's all psychology, all right? It's all psychology. He says earnings are bupkis because people don't understand earnings, and people are what govern how markets do. So it's not earnings, it's people. What people think about markets is what causes markets to go up and down. Earnings don't do crap because people don't understand earnings. Most people, I mean, they don't understand them. It doesn't make sense. Okay, so let's talk about this. So according to this book, like I said, we're still in a bear market that's going to last until like 2080, somewhere around there. Okay, 2080 something. So we're in this huge bear market. We're going to have 3 big, huge dips that are going to smash us to the point where we all get out of the stock market in dismay. Okay, world economies are going to fall. There's going to be increased warfare, increased distress, and international tensions and things like that. That's what this book said, all right? And it's written after they predicted the bull market, all right? Short-term people control long-term is actual value. This is true. But people are the ones who control the market up and down. The big bears, the big bulls. That's according to this book, yeah? So the thing that was really interesting that I thought was good as a metric to figure it out, he says, when you are in a great bull market, you have this rising wall of like worry. I think he calls it rising wall of worry. It's a wall because you're climbing this wall, like this wall of the bull market. And the reason the stocks are undervalued and the reason you can get good deals is because not so many people are not going in and buying them like crazy, and they're still a good deal, right? But when you buy like in a frenzy, right, that's when the stocks get overpriced and all that. So at the bottom of a bear market, which is when bull markets start, yeah, then you have to start buying. But at the time when the bear is over and it's time to buy, most people will tell you not to buy. Most people will have their money in Swiss francs, apparently, like other places, which is what was happening the last big bear market. So, and then treasury bonds, and like in the housing crisis, when they put them in treasury bond, they took it out and they put it in cash or whatever. So you have this as a rising bull market, everybody's worried that it's not real. Like every time it goes up, they think it's not true, you know. So they don't get fully invested. They feel like the market's still going to tank. The market's still going to tank. Even as it goes up higher and higher, they're like, the market's going to tank. The market's going to tank. You guys see how that works? That's the psychology of a rising bull, all right? That is not the psychology we have today. I know that. We do not have a rising bull psychology, okay? So people are afraid. Well, maybe a little bit. It depends. Depends how you look at it. So you rising bull, and they're worried, right? So really you have to figure out, is that the psychology of today? Are people like worried and not in the market, and they're afraid, okay? And are stocks really undervalued? You know, are the dividends good? Dividends are not good. But are dividends good? You know, things like that. That is a rising bull. When you get to the top of the bull, everyone has decided the market's great. All their worries were for naught. Everybody's in. They're buying in droves. They're trying to put everything they have. They're second mortgaging their house to put it in the market. They're they're selling off everything. They have nothing in cash anymore, and they're heavily margined out too as well. You know, that's when you're at the top of a bull. Okay, that's what's going on. So no, the worry has died. The worry's gone. Everybody's like full on, full force. This is it. We're in the money. We're gonna all get rich. You know, we're all gonna be millionaires. Blah blah blah. That's the top. All right. Okay, so none of your assets are in cash. They're not all in stocks. You're just going totally crazy. And everybody's got to get in. And they're like, you know, it's like, you're not in the stock market. Are you stupid? And they talk about, and you get these, and he's like, you can tell it's over when universities start saying things they start publishing books about how if you had been in the stock market, you know, you're going to be like up here and you know, all this stuff. Okay. Somebody says every 6 to 8 years there's a change from bull to a bear. Really? So anyway, you get to the top. That's the feeling at the top. Euphoric. The more stocks, you're just going to get rich. It's just a certainty. Like, just get in already. If you're not in the stock market, you're going to be like, you know, things like that. Do I hedge when I trade? I actually didn't know how to hedge until recently, honestly. So no, but I don't trade like tons either. So, okay. So you get to the top, right? And everyone's like, ah, and no one's hedging, right? They're just trading. Okay. So there's no hedging going on at the top either. People think everything's going to be awesome. They're like, ah, okay. That's the top of a bull. And then it starts to tank because everything's overpriced and it's just ridiculously crazy. And there's speculation and people are making up ridiculous things like derivatives with mortgages that are all based on, you know, what do you call it? Floating rates that are going to expire and everyone's going to default because their balloon payments will be due, crap like that, right? So like the housing crisis. But anyway, and then it starts to tank. How do people feel when it's tanking? It's called the slope of hope. On the way up, the wall of worry. You know it's a bull because people are worried and they're afraid to get in. That's the wall of worry. When they're no longer worried and everything's great, and it's called euphoria, they're at the top. Then you get the slope of hope. What is the slope of hope? Slope of hope means the market starts going down and people think, oh, it's just a correction. It's just a correction. It'll go back up. I'm going to buy more because the market's down because now it's cheap. So I'm going to start buying more, right? So that's the slope of hope. Even though it's going down, they're still hopeful. They feel like there's still something going on. It's a correction. I can get it cheap now. So they buy. They're still buying, even though there are other indicators pointing to the fact that the market has serious problems like the whole housing crisis stuff that was going on, stuff like that, right? So this, okay? Somebody mentions Bitcoin. So going down, right? And then there's still hope. Even though they go through that, and then they get the first hump because there's a 5 wave going down, right? So they get the first wave up and like, see, it was just a correction. Everything's fine. And nothing really changes in behavior. That's called the slope of hope, right? And you were supposed to get out up here, right? But most people are not out. They're buying more. Even as it goes down, they're buying more, right? They're buying more. I'm not trying to laugh about it. I'm just showing you how the psychology is working in this wave and how they talk about in this wave, okay? You get to the third wave, and it's pretty massive. It's bigger than the first wave, okay? It starts really kicking people's asses, right? But half the market still stays in because they're still on a slope of hope. A slope of hope, guys, slope of hope. Even though everything's down and they should have gotten out up here, but they're still on the slope of hope, baby. And how do you know? It's just the psychology. This is psychology, okay? This book is amazingly interesting because it's about psychology. But then they chart it out and they predict these things. I'm not teaching it. I'm just reading. I'm just telling you what the book is saying. I don't know who teaches, but you should read this book if you want to know more about it. And then the last up here, right? And people are just like, oh, see, it's recovering. It's great. See, I'm so glad I stayed in, right? Yes, the third wave is the strongest wave. And then the 5th wave goes down. Okay? So there you have it. That is Elliott wave theory. And sorry, and at the bottom, the very bottom, this is the slope of hope, guys. The slope of hope, slope of hope, slope of hope. Right? It's like a roller coaster going down. And when you get to the bottom, people are so beaten up by what has happened. They are so distressed. By that time, they're all pulling out. They feel like war is imminent, or maybe they're gas rationing. Like the last great bear market, they were gas rationing. There was like lines at gas stations, right? Things like that. That's cool. You have a 600-hour course. You probably know a lot more about it than I do. All I've been doing is reading this book, honestly. So there you go. So that's the wall of worry and the slope of hope. And when you finally know the bear market is over is when everyone has lost all their hope. They no longer believe in the stock market. They don't believe in any of these markets. They've either thrown all their money in gold or maybe Bitcoin, who knows. now. Maybe it's Bitcoin now. Maybe it was Swiss francs back then, and now it's Bitcoin. Who knows? They've thrown all their money into outside of the current market. They're keeping it in cash, short-term bonds, short-term securities, and they got nothing in the market. That is when you get to the bottom, and they no longer, people risk it, and they no longer believe that they will ever make money in the stock market again. That is when the great bear has ended. Okay, so I know for a fact we're not at the bottom of the bear. It doesn't feel like that at all, right? It doesn't feel like we're at lost all hope in the stock market. You know, doesn't seem like it. However, where they are in their analysis, I haven't checked recently what they've been doing. I'm still reading this book. So when I'm done with the book, I'm going to probably might Google it right now. You know, just have to Google it, you know, wave. It's Elliott wave theory, right? You Google it, see what the current predictions are by the Elliott wave theorists and see where they're at. Because they every so often they take what's going on in the economy and they reanalyze it, right? They reanalyze it and they redo their waves and like, oh, that really wasn't a up. That was just a little glitch, but the real up is here. You know, stuff like that. But anyways, they pulled their money out before the great housing crisis. So they did a good job. Can I show the book closer? Sure. So I'll show you guys the book closer and then we're done. All right. But you guys got the idea. At the Crest of the Tidal Wave by Robert R. Prechter Jr. At the Crest of the Tidal Wave by Robert R. Prechter Jr. And this is the forecast in 1995 for the Great Bear Market. Okay? They did say in the book that bear markets don't last as long as bull markets, but I don't know why they predicted it to go until 2080 then. Anyway, that's it for today, guys. Thank you for being on. I want to invite you to join my email list. YesFinanciallyFree.com is my blog. So it's YES, yes, financially, right? So financial with, and then an LY at the end, financially, and then free, FREE. YesFinanciallyFree.com. If you click on that link, you'll go to my blog, which has lots of information, including a replay of today's information. So you can get the exact title of the book if you didn't catch it by now. Thanks for the hearts. And you can go there. There is on the right side, there's a place where you can put your name, your first name, and your email address. You get on my email list, and I'll tell you what I'm going to be broadcasting about every Wednesday morning. So you get like a heads up. Now, I didn't tell everyone till last night, but I did tell you in advance that I was going to be doing this. And so you can find out what my topic will be, and you can jump on if you like or not. Share this with your friends, followers. You can go on my blog and read past blog posts I've done. Everything is centered on financial freedom, how to create passive income, how to pay off debt, reverse fees, how to negotiate, how to calculate return on investment. And today, obviously, I was talking about Elliott wave theory from this book. Okay? So I hope you guys have a speedy journey to your financial freedom and get what your goals are, whatever that is. For me, it's being a mom, full-time mommy, and a full-time wife, having a family, and enjoying learning, investing, and mentoring others on how to do the same. So that's my journey and that's my dream, which I'm living right now. It's exciting. But anyway, whatever your dream is, I hope that you accomplish it and are doing that right now. And if you're not, please reach out. You know, you can always join a Finance Freedom Mastermind. I'm starting a group of people in June when my third beta group ends. I am starting a new group, and that starts in June. So if you want like mentoring in a small group of people, that starts in June. You have to let me know ASAP. But it's good to work together with other people to become financially free as a group. More minds together make more ideas come out. And also, it's just fun to get to know other people and have friends in the journey that's really exciting together, you know? To me, it's that's one of the best things about it, is going on this journey with all of you together as a group, supporting each other on our way to higher and higher ends, you know? Hi, Clea, welcome. So thanks for the hearts, guys. I appreciate it. And like I said, keep on going for it. You know, if you want to be financially free, if you're almost there, you know, if you're working on it, if you're making progress, you can make it. Yeah, you can do it. You can quit your job. You can, you know, find a job or a profession or a career or a business that you love, whatever it is that your dream is. And if you already have a lot of money, you're looking to invest, welcome and thanks for being a part of the community. Really appreciate everyone here. You're all wonderful and you all have something to give. And I am eternally grateful for the support coming on my lives and asking questions and giving feedback and hearts and all that. Really appreciate every one of you. You have made me grow so much over the years, and I will keep doing this on Wednesdays. Sometimes I wake up a little late. I apologize. Thank you for being patient with me. Aloha, and see you next Wednesday. Bye, guys. Have a great day. Bye, Facebook Live. And then Periscope, I will say bye and see you next time. Yeah? If I can figure out how to end it. I'm not even sure how to end it. Let's see. Oh my goodness. And bye, YouTube Live.